Hey everyone. So we actually had the same question come in from uh, two of our subscribers this week, from Troy and from Mikhail. I hope that's the pronunciation of your name. If I butchered it, I'm sorry. But anyway, so the same question came in from both of these guys, and the question had to do with when you place a buy order and the buy order is resting, how do you prevent the gremlins from coming out and seeing that resting order and triggering it and trying to shake you out? So my answer to that is unless if you're some kind of a hedge fund or trading hundreds of thousands of shares, I really don't think that anybody's going to generate demand that's strong enough to trigger the handful of shares that we're all trading. And even if it is a lot, like let's say it's $10,000, $20,000, $50,000 worth of a particular stock, in the eyes of the market, that's still not a gigantic order just for one trade. You know, the many of these shares. The question from Troy, I believe, had to do with ticker VEEV, and that's a stock that trades 2 million shares a day. So unless if we're a major hedge fund that's trading several hundred thousand shares per day, the market's not going to move to just trigger our entry point, our buy stops, and just try to shake us out. The same thing is true on the downside. So we do want to be careful where we actually place our stops. And support and resistance should be thought of more as a range versus a hard number. I know we have to place the orders as at a particular level, and we draw all sorts of trend lines and we look for exact pivot points, but it's more of a range, especially well when it comes to support. So what I like to do when I'm placing my stops, especially for my sell stops, I'll have a couple of different points where I'll have my sell stops, and I call it bracketed stops. So, for example, let's say there's a short-term support level at, I don't know, 95, right? Let's say we bought at 100, and there's a short-term support level at 95, and then an intermediate term support level at 94, and then a long-term support level at 90. I would try to place stops at each one of those levels, and so that way, as they're getting triggered, I'm scaling out of the position progressively, versus being shaken out completely at one level and then being annoyed when the stock immediately reverses and takes off. So that's just one way to play multiple levels of support and really a support zone. So I hope that answers the question. I hope that helps you out. Let me know. And good talking to you.